Thank you very much. So my name is Oliver Baltzer. I'm co-founder and chief technology officer with Analyze Re. We are a startup out of Halifax, Nova Scotia, which is in Canada. So before coming here, I've been reviewing lots of the presentations that have been given here before, and many of them are rightfully so focused on the capital markets. What I'm here today for is to tell you a little bit about an industry that sits right on the intersection between the capital markets and the insurance industry, actually. So my background is technology, and before starting Analyze Re, my team and I were embedded in a reinsurance company where we built risk analytics platforms. And now with Analyze Re, we're taking that and we are building risk engineering and decision-making technology for a much larger market, which is the reinsurance and insurance industry as a whole. So what is reinsurance? In a nutshell, reinsurance is insurance for insurance companies. And so when you go and buy insurance for your car or for your house, typically you go to a regional insurance company where you buy a policy that covers you for fire, flood, hurricane risk, and burglary. Now, some of those perils are very localized. For example, fire and burglary are very, very localized. And these regional insurers, they can absorb those losses and pay the losses to you. But when a large catastrophe happens, like a hurricane or a flood, what happens, the regional insurers are actually not really in a position to pay out all of these losses. So what they do, they go out and they buy insurance themselves, and that's what's called reinsurance. These reinsurance companies are well-capitalized global players, global companies that are able to cover these large losses of catastrophes, and they're diversifying their risk on a global basis, and that's how they essentially make sure that they can balance out the risk. Now, these organizations are, they all have their own methodologies and how they assess risk, and traditionally they have seen quite a good return, anywhere between 15 to 30%. However, the market is changing. If you look at the capitalization of the reinsurance market, it's there has been a steady increase, and while that might be reflecting just simply a healthy growth of the industry itself, it's actually quite interesting to see where that money comes from. There are more and more institutional investors now that are investing from the capital markets that are investing into reinsurance, such as hedge funds and pension funds, and they do that because they now get access to instruments that are largely uncorrelated to the financial markets. Now, those institutional investors, they're fairly sophisticated and efficient, and their capital is relatively liquid. But more importantly, they are not looking for these 15 to 30% returns. They obviously they do, but they're quite content with single-digit returns. Now that cheap capital actually has quite a profound impact on the reinsurance industry, the traditional reinsurance industry, and with prices declining in reinsurance, companies are now struggling to financing the inefficiencies that they have been building up in their organization over time. So being a crowded marketplace, they now have to find ways of gaining more efficiency, whether that is operational efficiency or efficiency in the way that they're deploying their capital. And this is where Analyze Re clears the way for them, by providing them the analytical tools that they need in order to understand and better assess the risk more effectively, which can lead to increased profits. Our primary platform as a service solution is the world's first risk engineering platform. And it's deeply founded in high-performance computing, and it employs big data technologies and algorithmic optimization methodologies in order to give these companies the tools that they need in order to be more efficient. So effectively, you can think of primary as kind of like a laboratory where companies can now experiment, evolve, and innovate their own differentiating secret sauce without having to reinvent the wheel of all of these common analytics that is typical in the industry. And Analyze really gives them the building blocks to build sophisticated analytical solutions. That includes things like scalable data management, portfolio analysis, marginal analysis and pricing, as well as optimization and strategic planning. From an architectural perspective, it's quite simple actually. Primary is a cloud-based platform that is accessible through an API, and applications and solutions can plug into it through via desktop applications or mobile devices. Now that gives companies now the opportunity to truly become harder, better, faster, and stronger. Harder in a way that they can defend themselves against the changes that are happening in the market. Better in a way that they can make smarter decisions and generate greater profits. Faster because they can get answers to the question that they're asking much, much quicker and reduce the time it takes for them to analyze the risk. And is ultimately stronger because they are more efficient in the way that they can deploy their capital. So overall, primary gives them a clear view of the path ahead, a path that leads to growth and success. Now, what does the future bring for us? We really consider primary as only a small piece of a much, much greater puzzle. And what we have been observing is that the changes that are happening in the reinsurance market, they actually have a ripple effect into the insurance space as well. And so we see this increased demand of efficiency in insurance as well. And we as Analyze Re are poised to take on that challenge and provide capabilities in primary that are available to intermediaries such as brokers as well as insurance companies. Thank you very much.
Questions, Oliver? Did you have one, Ben?
Could you just explain to me a little bit more the total addressable market? So who are you going after? Because reinsurance, is it all big players or are there some smaller players that you can plug into? And then your revenue model as well. So is it subscription-based, license-based? How does that work? Thanks.
Yeah. So I'm going to answer the second question first about the revenue model. It's a annual license subscription for our current way of how we are addressing or rolling out the product. There's an opportunity to go to a much smaller, finer-grained rollout methodology through the platform as a service. At the moment, we are really looking at that annual subscription model. The first question around the addressable market, the reinsurance space is probably covered by about 2,500 companies at the moment. They are scaling from very small reinsurers that have a couple of million under management all the way to multi-billion dollar companies. And one interesting part about the reinsurance space right now is exactly those capital markets providers or entrants that come from the capital markets. They're setting up collateralized reinsurance vehicles that are operating very, very efficiently. And so they see in us a great opportunity to get on the market quite quickly without having to build out that large infrastructure that other reinsurance companies have.
Thanks.
Hi, I saw at the end you addressed a problem with bounded reality, basically making decisions quicker based on information given to you. I noticed also that you said mainly that was based on your algorithms.
Yep.
How reliable is your organization on algorithms? And is it mainly human algorithms, or have you got a lot of machine learning going in there as well?
Yeah. So it's a very good question. Thank you very much. So generally, our focus right now is primarily the property catastrophe business. It's a well-modeled risk effectively. There are various model vendors out there. Now, models, you always have to take them with a grain of salt. They are never accurate in predicting what's going to happen. Our algorithms are building on top of these models. So there is some risk around the accuracy there. The algorithms that we use are founded in evolutionary algorithms on the optimization side, and we are back testing them with underwriting strategies. So the idea there is to really get the strategic input from the top down, and then have that essentially feed back to the underwriters, and the underwriters, as the market changes, can circle through readjusting the strategy or readjusting their own strategy to fit with the overall company strategy. Does that answer your question? It was a little bit roundabout, but
Pretty much.
okay.
Yeah, so your algorithms are better because you use additional data sources than anyone else that can use, or?
Good question. The straight answer is our algorithms are better because there are no algorithms out there. So it's a market that is way behind of what you see in the capital markets.
Okay.
The underwriting, or essentially the reinsurance market, is at least 20 years behind of what happened in the capital markets. So things like optimization or even like algo trading is way out for them. It will come. I believe that it will come, but we're essentially setting the foundation in order to make that possible.
Why do you badge yourself as a sort of reinsurance tool rather than an underwriting tool?
Good question. So our heritage is actually in the reinsurance space, and Analyze Re is relatively young. We only have been around for 2 years so far. As we started out, we wanted to build a platform for reinsurers, and while our experience is largely on the front office and any analytics that goes into front office on the underwriting side around pricing and portfolio management, we identified ourselves with our original heritage. Now, over time, certainly we expect to grow that segment significantly and reach into other verticals. For example, as I mentioned, the insurance vertical, which becomes very interesting.
Thank you very much, Oliver. Thank you.
Thank you.
Thank you.